And there we go. We did that. All right. So we got a crew with us. That's exciting to see. Just want to say good morning to everyone here. And let me get the chat set up. And here we go. I'm just going to throw in a good morning and a happy Saturday. Paul, good morning, sir. Who else is in the house here? Everybody's groggy. All right, Justin, what's up, man? Rajon is here. Paulo's here. Priscilla. Jackie's here. All right, we got a crew. Scott. All right, it's the Breakfast Club. Great. I'm glad that you guys are here. And what we're going to do today is really we're just going to go through and chart together and take a look at what happened last week and start building our edge for um, a brand new week. So this will be an opportunity, really, if you have charts that you want me to look at. We'll do that together. I'll start with the broader markets, just kind of doing my weekend analysis. And instead of charting and posting them out there, this would be like real time work for us. And so I'll keep the chat open so I can see any questions that you guys have. And we'll go ahead and jump in. And I'm going to start with the SPX. So give me 1 second here to share. My eyes are watering like crazy right now. I don't know if it's my allergies or what. So if you see my eyes red and watering, you know what it is. All right. So let me just confirm that everybody can see my screen. Everybody see that? All right. So let's go ahead and get started and kind of take a look at the week that was. So we'll always start with the SPX. And so yesterday, let's start here is to frame everything. We got the non-farm payrolls, which came in way lower than expectations, 22,000, which, was a super big miss. And then we had the unemployment rate come in line with expectations at 4.3. So what we're seeing is a weakness in the labor market. This has been the one thing the Fed has been concerned with, and this was going to be the thing that pushed them over the edge to make the cuts. And so I want to share one other thing with you guys here. And I've talked about this quite a bit, but if you ever want to see the rate cut odds, if you go to the just type in CME Fed Watch tool, it will give you what the odds are for particular time periods. Okay, so you can see here, just clicking on September, that there's an 89% chance of a quarter point basis cut. So the cut's going to happen, and there's an 11% chance of a 50-point basis cut. So there's market makers are pricing in a rate cut for September. Where it really gets interesting is when you come over to October, as you can see, there's a 71% chance for a quarter point cut. So 2 consecutive months of cuts. And then if you come to December, there's a 65% chance of a cut. So the market right now is seeing the declining job numbers, not just from yesterday, but over the course of a few months has indicated that weakening in the labor market. And so they know that now the time is to respond. And so, in spite of inflation, whatever those reports come in, and yeah, next week we are going to get CPI and PPI. We'll take a look at next week's data here in a second. But regardless of what those reports are, they're going to cut. And what would be really bullish next week for the market is if inflation comes in line with expectations or even cooler, then we can see some uh, sustenance or more juice in this rally. So I wanted to start there just by showing you what what that data was, and we're going to look at the moves that we got here in a second too. so you can see how everything played out. And then just taking a look at the data for next week, you could see here Tuesday we get a non-farm payrolls annual revision. So this could be significant if they revise downward the numbers. That could show even more weakness in the labor market, which at this point, because as fragile as things look there, that could put some pressure downward on stocks. So just keep an eye on that data point. That comes at 10 a.m. And then on Wednesday, we it's a little different this month, and I thought this was an error in TradingView, but we're going to get PPI on Wednesday, and it is expected to come in lower at zero point 0.3 versus zero point 0.9 last time. So we want to see if we come in alignment there. And then on Thursday, we are going to get CPI, which is expected to come in at zero point 0.3, which is a tick higher than the zero point 0.2. The year over year rate is supposed to be slightly higher, and our core inflation rate is expected to be in line with what the prior reading was, zero point 0.3. And so we talk about core, that's energy and food. So that just focuses specifically on that. Um, Specifically oil, that's a big player in that inflation piece. And if you remember back to the Jackson Hole discussion when Powell spoke, was it 2 Fridays ago now? Basically what he is saying is he believes that the inflation from these tariffs is going to be transitory. It's not going to stick around. So we're seeing a one-time impact, and then we should see that kind of fade away. And then coming over here to Friday, we get Michigan consumer sentiment. That's expected to tick up, and that would be bullish for the market. And so that's what we're looking at. And the last thing, let me pull this up just to kind of give you guys some preparation. Let's come over here. All right, and I will share this one. This is going to be the earnings reports for next week. And so you can take a look at what we're going to get. Nothing really on Monday that I'm going to be paying attention to. If we take a look at Tuesday, uh, nothing really in the AM that's going to move things. Oracle will be a big one at close. Remember, they had that huge rally the last time that they reported. You're going to have GameStop, the meme stock that's going to be reporting it after, but they're not going to move the market. So it's really all about Oracle. Nothing on Wednesday and Thursday. The one that I've been watching, Adobe, and we'll probably look at that chart here in a little bit. They're going to report at close. Software has just been crushed when it comes to earnings. So we'll see if they can be an outlier, and then nothing on Friday. So that'll pretty much wrap up summer earnings, and then we will start the next round of earnings. Hard to believe, the third week of September. So I'll start updating the spreadsheet and get all that out to you. And I think the biggest, obviously, the way that earnings calls fall is you're going to get banks reporting first, and then you'll move into the Mag 7, Mag 8, and the first big boy who will report will be Netflix, and I believe that is September 25th. Okay. So that just kind of frames things for what we're looking at next week in terms of data, what we're looking at in terms of earnings, and just kind of setting that context up. The other thing you all should be aware of is that by September 30th, you'll hear this every so many months that the 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 debt ceiling has to be increased so the government doesn't shut down, so the threat of the government shutdown. So you're going to hear a lot of bantering, them working on a deal that always causes some weakness in the markets. And so just be ready for that because we will see an impact. Who knows how much? It doesn't last, but that's something that's coming up. All right. Paulo, I will definitely hit those charts for you. All right, so let's come over and we'll get into the broader markets, and then we're going to get to your charts. All right, so here we are on the SPX, and so very interesting yesterday. I'm going to come over to the 1 hour hourly chart. You could see that we pushed higher in the morning, and everybody, and this is where you have to be careful. Everybody saw that run and was like, "Oh, we're going to the moon," jumped in, and then what happened? It sold off. And the tendency recently has been, if we come out here and zoom out on the 3 minute, is the SPY or the SPX has been filling its gaps, and then after that, it's been bouncing. So if I just come over here, you can see the day before gapped up, but came back and filled its gap before it ran. If we come over here, this was Tuesday into Wednesday, gap up, slowly grinded down, filled its gap, and then pushed higher. And on Friday, what happened was we gapped up, but then we sold down, got below the 200, filled the gap from Wednesday, and did not come low enough to fill the gap from Tuesday. And we did come off of those lows, and the structure is pretty nice here because we made a low, but then the bulls stepped in, bought it up. Bears try to press it down again, but your bulls came in again. So we have a series of higher lows that came in here. So one, two, three. So that still shows that buyers are interested. It still shows that there's momentum and movement that's going to be left here in the markets. So, we just need to keep that in mind. But what's crazy too is this move, if we measure this out, 1.36%, it felt bigger than it actually was, right? But if you look at it, we're still up here at all-time highs. And if we really wanted to sell down, we could. So that's the one thing to keep in mind that, a 10% sell off from where we are would take us to, let me just measure this out, way down here to 58.77. Now, does that seem likely? No, because the Bears have been able to do has been 2 to 3% and not much more than that. So until we see something otherwise, it's still the trend is bullish. And the other part to take into consideration too is anytime you have a move like that up into uncharted territory, you're going to have smart money taking profits off the table. And just a little note here is you don't want to chase things when they're just pushing, right? Because you're not going to have a good entry. The only thing you could do there is scalp, but you have to know how to scalp to do it, and you have to be very fast. Otherwise, you can get in, and then let's say that you do get in at those highs. Here's what's going to happen. You get in, right? And then you're trapped in all this downwards, and then you have to hope for it to come back. And who knows if it's ever going to come back to those all-time highs. So that's why you have to be careful when you're chasing something that's way up there. All right. So we'll see how things want to play out on Monday. If anything, we will probably be green Monday because we had buying coming in on Friday. Tuesday, with that jobs revision, we could see some weakness. And then from there, it's just going to depend on what the inflation data is. So we definitely want to be data dependent and keep that in mind for our day trades. Swing trades, obviously, stick with your plan. But it seems like there's going to be more movement higher. Qs, we finally got that nice bounce off the 50. It's the first time we touched the 50 since April. And this is the 50 SMA in the daily. You do have a bunch of support here. And kind of the same thing. We pushed higher, sold back down, but then the bulls bought it back up. So let's see what wants to happen here. The Qs have been very, very strong. Where did my RSI go? It does that sometimes. TradingView's funky. Dow Jones made a new all-time high, sold off. We did have some buyers come in, so we're just pushing across the board. And then IWM still has yet to get to that all-time high. Doji candle that came in here with those rate cuts all but cemented and multiple. More than likely, you're going to see a new all-time high on IWM. Maybe before the end of September. Looks like we're going to fly in the face of seasonality again. But yeah, so indecision here, but still strong bull volume uptick. And this one, This is the only index that has yet to hit their all-time high. And just taking a look at some of the others here, the dollar did pop, but then came down. The bond market, here's TLT. You could see that we got above that 200, which is first time that's happened in quite some time. We'd have to go back to April. Um, so that's kind of intriguing because people are buying bonds as a defensive play. Um, so that's why we're seeing this pop here, and that's why you saw the move higher on bonds back February into April, is because of the fear in the market. And the other thing too is whenever people are buying bonds, that so when we look at the 10-year, this percentage here for 4.076, that's the yield that gets paid to bond buyers. So when people are buying bonds to be defensive, that yield is going to go down. So that's what it means. When whenever people are selling treasuries, selling bonds, that's when you see the yield increase because they have to attract buyers. So when people are selling, the government needs to be able to attract buyers. They have to increase that yield. So that's why it's important to pay attention to. But notice now that the rate cut expectations are in place, the 10-year is coming down. And I've talked about this before too. Mortgage rates are tied to the 10-year note. So as you see this come down, this is going to lower mortgage rates, okay? Because this is what it's based off of. And the spread above the 10-year for mortgages is higher. It's like 2.5% because mortgage rates are like 6.5, 6.6. Um, but watch that 10-year if it comes down, if you have a house that you're looking to refinance. I know we have a lot of HELOC peeps out there, me included. Might not be a bad time to shop around for a new HELOC, potentially get a promo rate or and even well, if you got in during the zero rates of COVID, then you're probably not going to find anything better, but it's just something we want to watch. And then we had the VIX here. It keeps trying to spike, but it's just not. We did get that massive candle. Where was it? Right here. Look at this thing. When I saw this guy, I was like, whoa, boy. And then it came down, but then just slowly pushed higher. And that's interesting, and that's why you should watch the VIX because when you see the VIX spike, typically that's when you're going to see the downward pressure on stocks, and you're going to see things drop. So this was the warning signal right here, and that came in at um, see, my times are messed up here. I got to figure that out. But when this came in, I think I posted in the group, hey, head on a swivel, be ready because the market doesn't like something. So just kind of tying everything together. Weak labor data is good for rate cuts. And that's good for liquidity into the markets because people can borrow money cheaper and you're really wealthy are going to borrow and invest and make investments. So that's going to pump money into the stock market. However, at the same time, with a weakening labor market, that means a weakening economy. And so there are going to be people negatively impacted by this. And the other thing to remember, the stock market is not the economy is not the stock market. They have some relations to each other, but the economy can be tanking and the market can be taking off. It's all about who has the dollars. And the wealthy have the dollars. If money is cheap, borrowing costs are cheap, they're going to borrow that money, they're going to invest. That's going to put liquidity into the markets and you're going to go higher. So um, it really is at the end of the day, the market, if you have money and you take advantage of it, you're going to make money. It's just the harsh truth of it all. So that kind of sets us up, broader market overview. We're going to be data dependent. We should get a green day on, and not a huge green day, but a small green day on Monday. Tuesday, there's a risk with the revisions of the jobs numbers. So you want to have head on a swivel for Wednesday, and Wednesday, Thursday, head on a swivel for inflation in terms of what happens there. But keep this in mind, any short-term weakness right now, dips are buyable and until otherwise, because that's what the charts have shown us. So all right, so let's go ahead and jump into individual tickers. We're going to hit Paulos first. Whatever you guys want, just go ahead and throw them in there. So let me see what Paul requested here. So we got Sound, RR, Wolf, and BBAI. You got it. So we're gonna start with SoundHound. All right. So on this chart here, I'm like I said, I'm moving to cleaner charts just because I'm trying to simplify my trading, and I'm always just looking to get better. And I had way too much on there. So, but I have the 50 is my orange, red is my 200, blue is my 100. Okay. So SoundHound has formed this nice little trend line here where we only have two touch points, but if we do get some weakness and come down, it's something we want to watch. And here after it hit that $17 mark following the earnings gap, it did reject and come down and test that 50, and that was the bouncing point. And we also too, we got this golden cross with the 50 crossing up through the 200. And we actually had some nice strength come into SoundHound yesterday, despite the weakness that we had across the board. If we're looking at the VRVP, we could see here the volume is pretty thin where we are, and up to 1550, we could probably get pretty cleanly without any true interference. So we want to watch for that. And if we were to break through this, what we would need to be mindful of is that if it does push up here, we're going to have a double top looking pattern. So again, head on a swivel at all times right now. You could also make the argument that you have a bit of a head and shoulders that's forming. So we want to see if we want to come down and get some weakness. But the only thing that I would say about that is you have these large volume nodes, you have these moving averages here. They're going to serve as very strong supports. So it would take something pretty significant for that to break through and to confirm that pattern. And so really the chart is bullish. And so there's probably going to be some more short-term upside here next week. And the area I would watch if you're in this one for trimming some profit taking is around 1550, moving your stops and just going from there. Come in, bud. All right, so that is SoundHound. So let's go on to, I think we had BBAI was next. BBAI. Let's take a look at BBAI here. All right, so just taking a look at this one, all-time high up here at 1621. Let's come over to the daily and see where we are. So we had a nice push higher. I mean, this is a beautiful double top here, right? Higher high, lower high. You could see those upper wicks come in, right? So there's definitely selling pressure on this one. And then we had that big gap down on earnings. It found support off the 100, pushed up, rejected off the 50, and broke down, got below the 100. And so now this is an interesting point to see what's going to happen here. Is it going to come down a little bit further and retest the 200 and then push back up? Potentially. Again, the next point of resistance on the VRVP around 560. If it could break through that, we want to watch this 50. So that's up there at 650. And then you're going to have this gap to fill here at 682 right before this volume node. So there is there is some opportunity on this one. You could see that we're uh, close to oversold here, but you're seeing that RSI starting to turn up. So maybe you'll get some money flowing back into this one. And BBAI does similar work to Palantir, and Palantir has been down. So notice these two kind of run similar to each other. Obviously, BBAI is not uh, is valuable of a stock, but Palantir is due for a little bit of a move. So if Palantir starts to move, we should see some movement from BBAI. So that's my take on BBAI. Let's see, what do we got next? Wolf. I was just looking at the Wolf chart before I came on here. I really like this one. All right, so we had that huge gap up on it wasn't even earnings. This was, I forget what the news was here. And we made a high of 1070, sold back down, and just notice what is the price action telling us? We have a support very clearly right here. And we could see that by all these lower wicks that are coming in. And we haven't broken below that 859 mark. So there is interest here. We were overbought, so we needed to pull back a bit. We did. Um, but there's still interest from buyers. Now, what we have to watch if we're looking here at the VRVP, if we were to break this, there's not much volume holding this up, so this thing could fall pretty furiously. But let's see if we get these moving averages catching up with Wolf and we just kind of move sideways for a period of time, consolidate, and then we get the next move higher. So I do think that Wolf has long-term potential. Just gonna have to be patient with it because it's not a huge mover. You also have the Golden Cross that took place here. And then RR. So here's RR. So you had this nice move off of a contract that they signed with an unnamed major retailer. I tried to put that document into AI to see if it was able to figure out who it was just based on context clues, wasn't able to do that. And then they got invited to I forget what it's an NVIDIA Expo where they're showcasing different things that they're doing. They're going to show off one of their robots. And so that's why you got this pop up here to 388. And from there, you just have people stepping in, taking profits. So what we want to watch for is that NVIDIA event. If we push up into that event, um, and typically what they'll say for those types of things, it's buy the rumor and sell the news. So what you could see going into that event is you might get another push up on RR, maybe into that $3 range here at this volume node. And then after that event's over, if it's not some monumental announcement, you could see it come back down. So um, that would be my take on Rich Tech Robotics. And companies like these are highly speculative, meaning that you're not going to get a ton of movement unless they get major contracts and they announce it, they're specific with it, and you see them turn profitable. You see them really just going to have big long-term staying power. We're not seeing that yet here with this company. So this is something like a 5, 10 year play. If you really want to profit off this thing, it's going to take time. For day trades, just be careful because these cheaper stocks like this, they can pump and dump them, and then you get stuck holding the bag, which we don't want to happen. All right, so let's go to Google for Priscilla. What a move on Google. I forgot about this one this week. I think Scott texted me. He's like, "Did you see Google?" So yeah. So again, keep this in mind. This is a lesson too. We had NVIDIA new all-time highs, Microsoft killing it, Meta killing it. Tesla hit their new all-time high in December. And then Apple and Google were just kind of lagging, and there's no love. But remember, the Mag 7, Mag 8, and this is why I trade these all the time, is they get rotated in. It's like a starting lineup in a sport. Somebody or a pitcher, somebody gets the hot hand or the one on the mound. If not, they go back into the bullpen. Well, Google is on the mound right now, and NVIDIA's in the bullpen, right? And there's always going to be that rotation. So you want to pay attention to, hey, who's running hard, who's got the momentum, who doesn't, and even anticipate and be ready for it so you can capture a move like this. So Google, I mean, we filled this gap. We filled this gap. You can see we faced some rejection there, but we just pushed harder. And the reason why we gapped up so hard was the antitrust lawsuit against them that was going to break up the different components of their company into individual companies was thrown out. And so that's what was putting pressure on the stock. Unbeknownst to me, I didn't know that that was the reason why there was concerns. But I mean, that's a strong gap on strong volume, and it hasn't slowed down. Now, here's what I'll say. This is not the place to chase. This is not the place to chase. Can it keep going up? Sure, it can. But you got to play the probabilities. And more than likely, what's going to happen here is you got to cool off. It's going to move sideways a bit and then proceed higher. Or it'll come down, slowly grind down, fill its gap, and then go up. All right. But our psychology trains us to think, oh, it's going up. It's just going to keep going up. It might work out, but you got to go high probability. It's not going to be 100%, but it's very strong. If you have long-term position or if you have long shares, consider selling some cover calls against it or trimming, moving your stop loss, because that's a heck of a move. I mean, if we just go from the low of this candle here, that's a 14% move. That's huge. 14% is huge on a 200 plus dollar stock, right? So lock in some gains. And let's look at this on the monthly. Look at that. One, two, three, four, five, six green monthly candles. I don't even know if there's precedent for this. How many do we have here? One, two, three, four, five, six, seven, eight green candles. These are pretty big. So you just want to be cautious in terms of what can happen here. And it probably does need to retrace a little bit. Let's go over to Whirlpool for Scott. We're all right. So let's take a look at Whirlpool, and we'll start here on the daily. So Whirlpool's most recent high, 112-ish, sold down, bounced nearly off the 50, rejected off of the 200, and then we had a significant gap down on earnings, found support here on this point of control. And then also too, if we're looking to the left here, notice this double bottom pattern and where this found support was right around that neckline. So that's an area of significance of importance. And also too, if we look here at the VRVP over here, you can see we have some thick volume nodes. We have the point of control. So that's a price area. That 84 area is a point of accumulation. And then little double bottom pushed up above the 100, accumulated, pushed up, rejected off the 50, came back down to that 100, and now it's pushing back up. And we could see that a little bit of selling pressure did come in here. So in terms of what can happen from here, Scott, is the 50, we have our 200 here or 50 here. If that 50 wants to keep climbing and we get a golden cross, there can be some opportunity for the upside. We don't have a ton of volume here in terms of resistance for it to go. So it could move. You're seeing a little tiny uptick in bull volume. We're flipping in momentum a bit on the RSI. So, there could be a move coming here. Then in terms of rate cuts, so with a company like Whirlpool, who's associated with, if you think of housing or real estate, homes need washers and dryers, refrigerators. And so that's all tied up into that sector. So as that market moves, and we saw some pushes in real estate tickers, Home Depot, Lowe's, you could see Whirlpool go. So this could be something that at least comes back up and test that 112. Now, I believe last year when they cut rates that we had a pretty big move. Let's see, September. Yeah, like around September, it got up into the 104s and just climbed higher into uh to next year. So potentially we could see something like that. And is that an unfilled gap? Yeah, so we have an unfilled gap at 128. So yeah, this one could be on the table for play here, especially with the conditions, how they're shaping up. with rate cuts. All right. Reddit, RDDT. This is for Tammy. Let's take a look at Reddit. All right. This is ooh. Yeah, I remember seeing when they reported earnings last because I think yeah, they had a really nice gap up and this thing just pushed. Um, so we have the all-time high prior to this was, let's see here, February 2025. So we push back above that. You do have what looks like a little bit of a topping pattern here, but again, you don't, we don't know. It's not confirmed. We would want to see if we just get rejected downward, and that would be invalidated if we break above this high here, right? So we want to, if we can get above this, then there's still more movement to the upside. However, again, keep in mind in terms of a swing trade, this is not necessarily an area we want to get in. And we could see the volume is declining from the uptick in volume here. So if you're in a position here, protect yourself, trim some shares, sell covered calls against it, because we'll probably get a little bit of a correction, pull back here. Um, at least would just be to that 50, and we can see what happens there. And that would almost be match up with the neckline. Um, but we did get a golden cross here on this guy off of earnings. So again, not the ideal spot to enter, and definitely a place to be defensive and then wait for a pullback if you're looking for something to take higher. Now, obviously, if you're looking for some day trades quick, you can make those work, but just from a longer term perspective, that would be the approach. All right, and let's come over and look at hymns for Justin. Hymns. So here's hymns. So the last time we pushed up into the 70s, it came down, found support on the 200 double bottom, pushed higher. Gap down, found support on the 100, pushed up higher into the 70s again, and then dropped down, and we got that double bottom. So this is one we've been watching and got nice support off that 200, didn't break below it. And now what we have to watch is what happens here at the 100 because that's where it's facing some resistance. But notice, even though it dropped yesterday, you had buyer step in. So it does have the 150 to get above. Now let's just go back over to the last time we were here. All right. And notice it pushed up. It did get above the 100 and the 50, but it came down. And where did it face resistance? There at the 100. And then what happened? Boom, this thing took off. All right. So if you clear this 100 and the 50, there is room to the upside on HIMS. And it's significant because it's done that in the past. And typically you'll see HIMS run whenever you see more of the high beta speculative stocks out there move, which we are starting to see a little bit. So this one could be a really good day trading stock next week to the upside if we get bullish continuation. So definitely keep an eye on HIMS. All right. Hood. I had this feeling. That's why I posted yesterday. I'm like, man, today would be a good day for Hood to get added, and they did. So that was exciting. And then we got this move here. All right, popped up to 110 and then sold down. Now, here's the thing I'll tell you about companies being added to the S&P is they don't always hold their gains. Like sometimes they'll give them back. So we could see this move go away pretty quickly because there's been weakness here. And you do have a head and shoulders looking position. We're going to open up in this area on Monday. So this will be an important place. Can the Bulls keep pushing it higher or are they going to get rejected? This is my core position right now that I continue to add to. I added some yesterday. I actually sold some puts on the weakness. If we come down here, which I doubt it, I'll sell some more puts. Um, but just because they got added to the S&P doesn't mean they're going to push higher. But I want to show you this. And I saw this, I forget what site, but I want to show you this chart on the monthly. All right. And then look at this chart. All right. Very similar. So if I just do this, just scroll back and forth, here's Palantir, here's Hood, right? So a lot of people are making the comparison saying that Hood is just in its early stages of moving like Palantir did. So we are right here um, on Hood, and that this is what is coming. So right here, and then the move higher. So um, we'll see. But this company, this is a company that I just believe in long term. They're bringing in a lot of younger people into the investing space, the trading space. They're doing things where with tokenized trading, where you're actually trading tokens and not the actual companies. So, for instance, you can't trade SpaceX right now, but in Robinhood, you're going to be able to trade tokens, which means that there's no value attached to it other than people buying it, and you could trade it. They're bringing in betting markets into their platform. More crypto is being added. So I think this is just going to be a company that has big time growth trajectory. And look at Coinbase. Coinbase, what hit $440, and it's just crypto. Robinhood does crypto, stocks, betting markets, and then tokens, and they're attracting the younger generation, and money goes where the younger generation is. This one could be 300, $400. Now that's going to take time, but I think there's a ton of upside here. But probably do it again, that's S&P edition, probably a little bit of a pop, and then it's going to sell down and get people taking profit. So this is one that I'm just in for the long term. This is my core position right now. So I'm being patient with this guy. Um, can Scott question, can SoundHound doing anything that Google can't already do and do it better? Just makes me quit. Yeah, so obviously your bigger companies, I mean, they could buy a company like SoundHound in a heartbeat. They would just have to see the value potential there, the future growth of it. So in terms of an acquisition, it's possible you might see that, but somebody would have to really believe in what they're doing. Um, are they doing anything that Google can't or that some of these larger tech companies can't? No, they can do them, but it might be like a specific technology from, one of their leaders or engineers that really stands out and is one of a kind. But no, I mean, your big tech is your big tech. But they're doing something, but their sound has a bit of a mean stock quality to it. Um, because you'll get the big pumps, but then you get the big dumps. I think there's a chance that they could get acquired by someone. But to answer your question, no, obviously the big tech can do it, but they may not see it as profitable, right? Hims already hit Hims. I'll just go back to it real fast. Hims. Um, yeah, so again, we're just like we were off to 200 here and pushed higher. We're in that same spot. We just have to break that 150, and that could be good opportunities for some day trades next week. All right, then I'm just going to hit a few tickers here, and then I'll let you guys get on to your morning. Um, Broadcom, I mean, what a move this one had. It got up to 356. Look at this gap. Let's measure this out. $50 move, right? This thing just pushed. And then what happened? Sellers took profits, right? And then this thing dumped and just kind of moved sideways. So more than likely what will happen is we'll trade um, inside this candle for some time. I don't know if we'll fill that gap, maybe during a market correction, but we'll probably do something like this and just trade inside that. and then eventually break out of it. So watch, this is going to be range bound for some time inside of that price action on Broadcom. Let's take a look at a couple more. Palantir is definitely showing buying interest here on that 50. They're overdue for a move, sitting on that visible volume range. So watch Palantir to get going because when it gets hot, it gets hot. And really, since this second week of August hasn't done much, so this one could be ready to do something. So watching that one. Congrats to all the Apple holders out there. This thing's been strong, and you still have room for this one up to 260. So definitely room here. Tesla, I think Tesla's getting ready to start a run. We got this trend line established. It's touched that several times. We're building pressure. We broke out of this triangle. And so if we can squeeze through this range, 380, 400 are on the table. So I'm actively watching Tesla now because it's been a little dormant. But as the bigger boys cool off, specifically Microsoft here, which after their big move, they're finally cooling off, you're going to see the money rotating. So the money rotated into Google and Apple. Eventually, they'll cool those off. So you're starting to see some of that money flow into Tesla, rinse and repeat. Um, yeah, nice move down on Microsoft. Nvidia, it needs to cool off. Does this mean that it's a bad company or it's going to zero? No. That they're getting punished because of China, but it's going to create some good entry spots. People will get scared out of this and, creates opportunity. Um, I don't know if this can hit the 100. I really don't. That's going to be hard for that to come down here. Let's look at the weekly. That's going to be tough. Let me mark these highs here. So if I come back over to the daily, that's going to be, here's what you're going to need. You're going to need some kind of negative news or more things coming out about other companies making chips. But definitely going to be further weakness down here, but maybe these nodes here, 158 to 156, keep an eye on those. But they're in the bullpen. NVIDIA's in the bullpen. Here's one you want to watch. Here's the earnings. Oh, it's not until October. Oh, it was way early. So Netflix, on the 15th of October, you finally got above that 50. What is going to happen from here? You definitely have interest. Is it going to just move sideways or come back down and test these lows? That's what I'd really like to see heading into their earnings report, something like this. And then from there, we can gap up and out. But Netflix is just, it's been kind of quiet, but man, it moves 20, $30 a day like nothing, right? A few more here and then we'll wrap up. So Lulu, I'm so glad I didn't do the credit spread on this one and waited till after earnings, but look at that drop. That's massive. And it had a push up there on its earnings day, but yet a lot of people trapped. It's almost down here at COVID lows. But just negative forecast, negative guidance. They don't know when it's going to end. This one can definitely come down more. I'm going to wait. If we can get down here to COVID lows, then I will set up a bull put spread on this one. But didn't pull the trigger. And then Adobe, I keep saying I'm going to take a shot here. And now look at this. We have this support, and look how perfectly this wick came down into that hammer. And we have a double bottom. So he had double bottom here, double bottom here. I don't trust the company, but I think in terms of a technical bounce, it is set up for a move. So I'm, as much as I've watched this thing, I'm going to have to do a very, very low risk, cheap play, maybe a strangle on this one with out of the money calls and puts because they report Thursday and just see what happens. But it's definitely not. It's a struggling and some people say dying company. So Boeing. So I did buy calls here. They are down. Um, I have until October 11th, but this one, the bugaboo is this monthly. But once it can get that monthly, it's going to run. So that's what I'm waiting on. You could see that when it's got up there before, it's taken some time, but it has broken out. Um, so we'll see. But decent bit of weakness that came in here the last few days. CRM, nice recovery, filled its gap from its drop down. Let's see if this one wants to push off. And that's it. All right, guys. Well, it's fun spending a Saturday morning with everyone here. I will get this video put together and sent out to all of you. I'm going to be still doing the standard charting in the community, either at some point today or maybe tomorrow. I'll probably actually take today off, but I'll put the charts in there. So if there are things you want me to chart physically so you could see them in the group, just let me know. Shoot me an email, shoot me a text, put it in the community. I'll get that done for you. And I hope you guys have a great Saturday. What a nice way to spend the morning, right? All right, guys, take care and thank you as well for being awesome. And I will talk to you soon. No 20 miler today. No, not today. I get tomorrow's my last day to get it in. So I think I may have bit off a little bit more than I could chew there. That 20 might become 10. All right, guys, have a great one. I'll see you.